Hey, welcome, it's Drew Blazik. I'm going to do this walkthrough. We're going to go through the three-statement model with equity statement and well, that would technically be the fourth one, but we're going to go through the balance sheet, the income statement, cash flow statement. So this sheet, this blank sheet will be right below this video. You can follow along and practice so that you can pause the video. So I'm gonna go kind of quick so you can pause it and reverse it if you want to listen to how I did it. Okay. So first off, we're gonna look at the income, or I'm sorry, the balance sheet. The first thing is on the balance sheet is our assets. Assets equal liabilities plus equity. Asset is what you owe. You own, like you actually, I say own, uh, paper you own, but then it equals how much of a loan you took out to buy it, right? Because the bank technically owns it until you pay them back, plus the equity. So if you have a home, 300,000, I owe 200,000. So it's going to be 300,000 equals 200,000 plus I own the rest. If I sold the house, I get paid 100,000. All right. So it's broken down on current assets, which is anything that will be converted into cash within a year. And it's always based on liquidity. These are the most liquid. So let's add those up. I'm going to hit uh, total current assets. All we have to do is add those up. I'm going to hit all equals, and that automatically sums up the ones on top. Okay. And then I'm going to hit shift and hit the right key. I'm going to highlight it over and I'm going to hit control R. And that's going to fill to the right. And what that does, it does the same equation I did on that other cell and it drags it over to the next. What you could also do is grab that little box on the bottom when you did a function and just drag it over. It does the same thing. Try not to use the mouse as much as possible. Use the keyboard, especially if you're accounting finance major. I think that really will help. All right, next we got long-term assets or fixed assets. Fixed assets are anything that can be converted into cash longer than a year. So what do we have? We have property, plant, and equipment. Those are fixed assets, less depreciation. So we will calculate if it's depreciating, we will put that in there to show more of not necessarily the market value of it, but it does show depreciated value, what it's worth. So again, I'm going to hit all equals. It's going to sum those up. I'm going to hit enter. Now yours, when you hit enter, it will hit the next cell down. I deactivated that. When I hit enter, it stays in the cell. Finance majors might want to do that. I can show you in class. Hit shift, hit to the right, hit control R, and then that will bring it over. Okay, next, we want to know our total assets. So I'm going to hit equals. I'm going to hit the up arrow. I'm going to go to net fixed assets, hit plus, then I'm going to go all the way over to our current assets. I'm going to hit shift, hit the right, control R. All right, so the assets will equal, now liabilities, anything that we owe. Accounts payable, that's what we owe. Accruals, note payable. So if you're a company and someone did work for you, you owe them wages. So that becomes a liability once they actually perform the work. Current liabilities, anything an obligation I have to pay within a year. So this is within a year. It's similar to current assets. Current assets are cash that we produce in a year. This is anything I have to pay cash within a year. And it's based on liquidity. Got to do the payable first, accruals, and then notes payable. So we're going to add those up and hit all equals. That's summing those up, shift to the right, control R, and we just added those two. Next, we got long term. Typically, these are going to be bonds, long term debt. There's a lot of things you might see what it is. It could be long-term debt, LTD, or long-term liabilities. So it depends on how they label it. And there's a couple other names that companies use that might seem a little different, but they're the same thing. All I'm going to do is add above it, is shift to the right, control R. Now we want to know what is our total liabilities. So I'm going to say equals. I'm going to go to my long-term liabilities plus my short-term obligations, my current liabilities. Add those up, hit shift to the right, control R, and there we go. So assets equals liabilities plus equity. Now, what do the shareholders, the owners of the company own in the business, not a loan, not something that they owe? So what we have here, we got common stock. We got something called retained earnings. Okay. Off the income statement, you will have net profit or net revenue or net profit. What you want to know on that is there's two things you can do with profit. You can either pay the shareholders with dividends or retain an investment into the company to research and development, maybe open another plant, buy machinery, something like that. That's retained earnings, comes from net profit. But you see it declined, so we had to go into it. There's a reason for that, but that's what it is. So we're just going to add up total equity. So alt equals sums it up. Hit shift, arrow to the right, control R. Now I'm going to add is total liabilities plus equity. I'm going to equals. Well, here's the total equity. And then I'm going to say plus, and here is the total liabilities. And I'm going to hit shift to the R, control R to the right. This is what you want. That check down there, you want that to be 0. That means it balanced. A balance sheet must always balance. Okay. So what I did here was I said assets, total assets minus total liabilities plus equity. If there's a dollar amount, it's not balancing. If it equals 0, we are good to go. All right, let's go to the income statement. That's the balance sheet. Income statement's your revenue, how much money you make. The first thing in all income statements, either going to say sales or revenue, which is price times quantity. Sales or revenues, price times quantity. That's our total revenue. Next is our COGS, cost of goods sold. That's the cost of the actual goods sold, make the good, raw materials, the labor that went in to make the good, anything that went into that good, we want to know what it costs. The first thing we want to calculate is our gross sales or gross revenue. So we're just going to add those up. A couple things. Some people on an income statement might have their negatives a positive. What I mean by that is they like all positive values. If you do it that way, you have to do this minus that. I like to have my negatives a negative, and the reason is it makes it easier. I can hit alt equals or alt equal, and I can have it automatically sum those values. So that's that revenue minus cost of goods sold. I think it's easier. You cannot do it this way if you have two positives because really it's adding them. Since we already have a negative, it will do it correct. You can see our gross sales went up. It's a good thing. 2020 to 21, it went up. Next, we want to calculate our EBIT. That's earnings before interest and taxes. We want to know what that is. EBIT is also considered operation margin or operation profit. It's from operations of the company, how much money we make before we have to pay taxes, before we have to pay interest on our loans or interest revenue coming in. So what I'm going to do here is I'm going to equals. I can't do alt equal because there's not values. I have a gap there in a cell. So I'm going to type in sum. Now we're there, and I'm going to hit the arrow up. I'm going to hold down shift. I'm just going to highlight. And what you want to do is on the income statement, you want to add the last calculated number, which is gross sales. And then I'm going to subtract out the next two costs. Then I have a minus sign so I can add them all up. And that's going to give us our EBIT, which is negative in 2021. Sales went up, but other expenses and our depreciation skyrocketed. Control to the right. Look at that. Our EBIT in 2020 was much higher than our EBIT in 2021. What do we subtract out? Depreciation. Just a quick little note on that. It's not a direct cost. That is a machinery I bought that I did not show in my income statement the capital expense for that machinery. However, for accounting purposes and the government purposes of taxes, they let me take that machine and say it's going to depreciate typically 5 years, a certain amount per year. Okay. I'm depreciating it. It's not a direct cost. It's like the example if I made $100,000 this year and I can claim my car depreciated, my office depreciated, my land depreciated, and I could say, well, those depreciated. Now that was $50,000. And the point is, I want to get that taxable income as low as possible so that the tax percentage on my income is less. So we add depreciation for tax purposes, and that's it. It's not a direct outlay of money. It's on the income statement. The actual cost of that machine or unit that we bought, whatever, to make another good or an investment of land property, that wasn't a capital expense not shown on the income statement. So that's important. Next, we want to know what is EBT. Now we want to subtract out interest. So EBT's earnings before taxes, they're all equal. I'm going to highlight that cost. I'm going to hold down shift, highlight the last calculated field. Now we're down 160,000. Shift, Control R. You always could test to make sure it was correct, and it did do it correct. Okay, now we want to subtract our costs, and that's going to give us our net profit. Okay, that's negative. There's a negative. I'm not going to calculate any tax because there's no tax. So I'm going to hit 0. No taxes this year. Okay, the next one, I'm going to calculate the tax. I'm going to say equals. I'm going to go over to the left here, hit the tax percent, the marginal tax rate. I'm going to multiply that times our EBT. Okay. Before I do that, I want this number to be negative because I want all costs to be negative. I'm going up to the formula bar and I'm going to hit the negative sign, make that a negative number. If you forget to do it, just do that. You can go here too into the cell and put a negative in front of it, and that would make it a negative number. And now we can find out our net profit and our income statement will be complete. So I'm going to hit equals sum tab. I'm going to go up to the last calculated field, hold down shift, and I'm going to highlight those cells. So what it's going to do is going to add in or subtract any of those numbers, which is going to be the same. I'm going to hit shift, control right. You see, we made $109,000 and now we're down 160,000. Right. So we got other data here, and I'll explain this, and we'll go to the next statement. We got number of shares, 28 to 21, 100,000. Nothing changed. That's the number of shares outstanding. Next one is EPS, is earnings per share. That means of the net profit, how much do we make? So what they did here, I'll show you. They took our net profit, divided it by 100,000. Negative 1.6. So that's all they did. So that's how much earnings, profit, net profit, earnings that we got per share, 100,000 share. So you see we're 1.1 here, rounded up in 2020, and then we lost negative 1.6. I'm sorry, 1.602. Next is dividends per share. What percent or what dollar amount per share do we pay out as a dividend? You can look up any company on Yahoo Finance. It'll show it there. 2020 was 28 cents per share. So I want to find out total dividends paid. I'll multiply it times 100,000. And then in 2021, we still paid out dividends, 0.11. Stock price and lease payments. You can see the stock price really did suffer, went down. But we don't need to know that for this example. All right. Next, we want to know statement of stockholders' equity. Just to let you know, what I do is I typically create one header and I'll copy the header and then I'll paste it to the next one. And then I'll go into that and then I will edit. It will change the just type the name. So you like to keep the headers the same. Once you create it one time, copy, paste, change the name. All right. First thing we want to know is how many so we're looking at balances of 2020, common share stock. How many shares outstanding? Well, I'm going to find that. I have that in my other data. Look all the way down. We're looking at 2020, so that's 100,000 shares. Next thing I want to know, what is the amount? Say equals in that cell. I'm going to drag everything over. Make sure you put that in there. Don't just enter in the numbers when you see me do it. Hit equals in the cell, and we got to go find it. What's going to be in the balance sheet? We're still looking at 2020. That's common stock. That's the amount of equity the company owns. I'm gonna say equals. Next is retained earnings. What is our retained earnings? We're looking at 2020. Is that found? Retained earnings. We did that earlier. That's found in the balance sheet of our liabilities plus equity. There's retained earnings 203. This is 2020. Make sure you don't hit that. It's 2021. We'll have to calculate that. 203. Next is stockholders, total stockholders equity. Let's let you know that's the easy way. I like the T. It brings it over, but oh, there you go. All right, total stockholders equity. Where's that found? That's going to be found in the balance sheet. Again, I'm going to hit that cell. I'm going to hit equals. I'm going to go all the way over the balance sheet and look for total stockholders equity. Total equity here. So I'm going to hit 2020, hit that cell, hit enter, bring it over. All right, next what I want to do is I'm going to go to retained earnings. You see, what are we under here in retained earnings? We are under 2021 net income. So we had going into 2023, $203,000. However, I want to know how much did we add to retained earnings from 2020 to 21? To figure that out, two things we have to know. How much profit did we make? Number one. Number two is what do we do with the dividends? The difference between that is going to go on into retained earnings. So what we're going to do is we're going to find out what was our net income in 2021. I'm going to go over here. Where's net income found? That's the income statement. So I'm going to go to 2021, scroll down all the way to the net profits. I went past it. It's negative 160,000. Well, that's not great. I'm going to highlight these. I'm going to make sure they're centered. All right, that looks better. Next, I want to know what do we pay out in dividends. So what I'm going to do here is we know that's in the other data, and I'm going to figure this out. I'm going to go down here. What it's going to be is here's our dividends per share. This is what we paid out. Multiplied times how many shares. We paid 11 cents per share, 100,000 shares. That's going to be a negative because that's paid out. That's a dividend. So I'm going to hit a negative there. And we have going into 2020 to 21, we had 203,000. We subtracted out the net income. We subtracted out the dividends for that year. So underneath this, I'm going to add all those up. And this is going to give me my balance of retained earnings from 20 to 21. 32,000. Now, what I'm going to do is just to make sure we did it correct. That's 30. Where can we find that 32,592? Well, that's going to be found in the balance sheet, retained earnings. So what I could do here, I'm going to go right here. I'm going to hit 2020 minus 21. Well, I know, I'm sorry. I don't want to do 20. What I want to do is look, 203,000, and then it went down to 32,592. That's what we just solved. So why did retained earnings go down? Because they lost money in net profit, and they lost money in dividends. They still pay the shareholders. That's why it declined. But double checking the balance sheet shows that we did it correct. And you can do a check. I could have a check down here saying this minus that, and there's a dollar amount underneath that. That means we did it incorrect. Last thing we want to know is total stockholders equity, what the company actually owns, the owners own of the company. Well, we had a loss. So what we want to do is we're going to take our, what do we do? Lost that. Plus, we lost this negative here. So I'm going to add those up. That's $171,000. That's what we lost. And I'm going to sum up the total here. So we had a total stockholders equity of 663,000. We lost 160,000 on net income. We lost 11,000 in dividends, which is a total 171,176. That means our total stockholders equity is 492,592. If I go back over to the balance sheet, we had 663 and we went down to 492, and I could do this check. I can say 663 minus 492, and that's the 171,176. That's 160,000 of net profit and 11,000 on dividends. Okay, so we finished there. And then the last part, spend 5 minutes on it, is our statement of cash flows. All right. So, sorry. First thing we want to bring in, we want to look at our net income. Looking at 21. Okay. Statement of cash flows. The income statement does not show the true value of cash. What it does show is how much money we made, but some of it's credit, some of it we owe, and some of it's depreciation. That's not a true value of cash. This is going to be how much cash do we have. So what we're looking at here is statement of cash flows. We have three different revenue streams. We got operations, the operations of the company. We have financing, and we got investing. So we're going to do operations first. So first thing I want to do is find out the net income. I'm going to go all the way over to statement. And then that's found in cell M20. It's a negative 160. Okay. Now what we want to do is that's what we lost. Now I want to add back in the depreciation because that was never a cost. I only depreciated the income statement for tax purposes. So what I want to do is add it back in. So we're going to go to the depreciation. It's found right here. That's a negative. That was a cost on the income statement, right? So what I want to do is hit this. I'm going to put a negative in front of it because I want to flip that sign, adding it back in. Never lost it in the first place. All right. Now what we want to do is what is the change of accounts payable, accruals, receivables, and inventory? What does that mean? What is the change from 20 to 21? Okay. Now, let me explain this a little bit. Make sure we understand it. The accounts payable is a liability, a AP account. It's what me as a business owner owes to somebody. If I was Lowe's and I bought a bunch of washers from Whirlpool and it came in, I still owe Whirlpool maybe $100,000. I didn't pay it yet. I owe it. So what we want to know is what impact does that have on credit or on cash? So did it go if it did not change, our AP account stay the same, no impact in cash. Okay, let me give this example real quick. If I pay my electrical bill, gas bill on pay cash, well, my paycheck goes down, 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 down. But what happens if I decide to put everything on credit? I owe somebody later. Think about that. I get paid my paycheck, everything goes on credit. That means I have more cash today. My credit goes up. I don't owe it today. I'm pushing the can down the road. So when we find out our liabilities, if our liabilities goes up, it means we're going in debt. We have more cash today. We're not using our cash on stuff. So liabilities are a direct relationship. If it goes up from 20 to 21, our cash goes up. If it goes down, our cash goes down. So let's find the difference. I'm going to say equals accounts payable. I'll go all the way to the balance sheet. So what I'm going to do is doing 21 minus 20. The accounts payable went up, right? That's added cash. We went more into debt this year. That's more cash available for me. Let's do the same thing with accruals. Accruals is, let's go find it, is a liability. What I owe. Look, it went up from 136,000 to 489. That means I'm using credit. That means I don't owe that till next year. That means I have more cash today. Next, accounts receivable. Now we're gonna have to do a little different here. I'm gonna show you the method I would use, and I'll explain to you why. Because accounts receivable is an asset. What does that mean? You're a business owner. Someone comes in and buys a product on credit with you. That means they bought my good according to the income statement. That was a sale, but according to me, I did not receive any money yet. Okay, because they're going to pay me back next month. That means if my accounts receivable holds steady each year, right, each month, each period, there's no change in accounts receivable, no change in cash. Because if you owe me 20 bucks, and then next month, let's say somebody owes me 20 bucks, well, you're paying me that 20. And then the next month, uh, somebody owes me 20 again, but then that person pays me 20. So there's no change. However, we do have a change here. It went up. We had more people coming to our business buying things on credit. We counted as sales. However, I'm going to put a negative bracket. I'm up in that formula bar. Now I'm going to say this minus this. Two ways of doing it. I like doing it this way. It's a indirect relationship. If accounts receivable goes up, my cash goes down. I receive less cash, or people are going on credit. If my accounts receivable goes down, it means more people are paying cash. My cash goes up. So it's a negative relationship. So I do 21 minus 20, and I put a negative in front. That will correctly give us the result. That's a negative 280. Or you could have done, some people do, is do 2020 minus 2020. Problem with that, you might forget. It's confusing. Because liabilities is 21 minus 20. Do everything 21 minus 20, the newest year minus the old, and then just make sure on assets you put a negative on front of it. Say indirect relationship, negative relationship. On the liabilities, a positive. All right, last is inventory. So I'm going to do the same thing. I'm going to put a negative. I'm going to bracket it because that is an asset. It's right here. Inventories went up. I want you to think about that. I decided I'm going to have more sales, so I increased my inventory. If I increased my inventory, I had to use cash to make that happen. My cost of goods sold, or my cost of making the goods hasn't technically been sold yet, right? All of it hasn't. So it's a negative. It's an asset. So I'm going to do a negative. I bracket. I'm going to do 2021 minus 2020. This will change. That's a negative. Great. Next one down here, I'm going to hit all equals. I'm going to sum all those up, and we're going to see the cash flow from operations. We are down $164,000. What about the impact on investing? What is investing? Business buys, so it shows right here. Spell that. Business buys property, plant, and equipment. That's considered investment. So what we want to do is, did we increase it from 20 to 21? Do we have the same amount of property, plant, and equipment? So how we're going to find out is I'm going to say equals. Where's that found at? That's found on the liability. I'm sorry, the equity. I'm sorry, the long-term assets. My mind's not working right. Okay, so we got property, plant, and equipment right here, right? We went from 491 to 1.202 million. That means we increased it. So what I'm going to do is show that's going to be, so here's the formula bar up there. If it went up, that means we use money, buy it. That means we have less cash. Since it's an asset, it's an indirect relationship. If that goes up, cash goes down. If that goes down, right? If our property went down, it means we sold it off and we received cash. Then cash goes up. Indirect relationship. So I have the negative. I'm going to bracket it. I'm going to hit the 2021 and I'm going to subtract from 2020. I want to know how large did it change by 711,950. So investing, we are down that. I'm going to hit all equals. That's the total what we did. That's the only thing we had. Okay, we did operating, we did investing, and now let's do financing. Financing is like going in debt, stuff like that. So that's going to be liabilities there. So let's look what happens. I'm going to say equals. I want to know the change, the increase. That's a change in notes payable. We'll go all the way over, go to notes payable, which is a liability. Here's notes payable. Right. So it's going up. It's liabilities. It's a direct relationship. If it goes up, cash goes up. That makes sense. If I take out $100,000 loan today, I go in debt. I have more cash today. I have that loan. If I take less debt, my debt goes down. I'm using cash to pay it off. My cash goes down. So I'm finding out the change of notes payable. Went up by 436,000. That's more cash today. Let's see our increase in long-term debt. It's right here. Well, that went up as well. That's a positive value. 2120. Then we have to find out part of financing activities, good thing to remember, is payment of cash dividends. So I want to know how much dividends were paid. I'm going to say equals. Well, I have it right here, $11,000. I'm going to keep that as a negative because that is negative. This caused more cash in. I had to pay that out. Now we're going to hit all equals, sum all those up. There we go, 825,000. We're almost done. All right, let's go to, all right, we're going to do a couple things here. I corrected everything. Spell check. Looks like I didn't save it when I corrected it. All right. So I'm going to go first. I'm going to show a couple ways of doing this. I'm going to go to cash at the beginning of the year. Well, how do we find out how much cash we have? I'm going to pull that in on the balance sheet. Top of the balance sheet is cash. Well, how much cash we at the beginning of the year? That's 2020. It's 57,600. That's what we brought in. Well, how much cash we had at the end of the year? Well, that's 2021. Excuse me. And we want to know what is the net decrease or increase in cash. What I'm going to do is I'm going to take the cash at the end of the year minus the cash at the beginning of the year will show us a negative $50,000. Okay. Total. So I'm going to show you. So I just did that calculation on the balance sheet. We just did the cash flow statement. I'm going to show you how they're all connected. So I'm going to total up. This is what most balance sheets do. So I was following what PowerPoint showed is I'm going to add up all our caching activities or caching, our operation, financing, investing activities. I'm going to add it up and see how much cash we have through these activities. Okay. Through the statement of cash flows. This should show that value. I found that on the balance sheet. So we're going to go 825,000 plus negative 711,000 plus negative 164,000, which should be the same value. Negative 50,318 through the statement of cash flows, or you go to the balance sheet, negative 50,308. 318. So the same value, as you can see. Okay, I think that's it. I want to do that video. Any questions, please send me an email. Use that blank sheet, work on it, and follow along. You can pause the video, go back and forth. Any questions, let me know. God bless, and I'll see you later.